The markets had a turnaround today and did significantly better, with the S&P/TSX up over 3% on the day. The industries that led this rise was the information technology, industrials, and healthcare. I would like to see the energy sector perform better, but at least it was slightly up. Overall, though, it's hard to say if the market is rebounding and we hit the bottom there, but this could look better going forward. But overall, a 3% gain at the level we're at isn't that massive when you consider how much it went down yesterday and overall the past 2 weeks. The S&P 500 was also up 4.94% and overall had a really good day. The industries that led this rise were the financials and the information technology. Overall, though, it is still down 4% on the week. And again, it's hard to say if we were at the bottom before, as information will still come out about the coronavirus and the price war between Russia and Saudi Arabia. The Dow Jones was up 4.89%, making it a week loss of 3.47%. The Nasdaq was up 4.9%, making a week loss of 3.9%. Unfortunately, the FTSE wasn't up on the day and actually fell 9 basis points. The Nikkei, on the other hand, was up 0.85%. WTI rebounded from yesterday and was up almost 11% and is now at 34.50. Overall, though, the past 5 days it's still down 27%. Brent crude is up 9.6%, but still has that 5-day loss of over 27%. Gold fell on the day 1.7%, but still slightly up over the past 5 days. With stocks up on the day, yields on government treasuries were actually up, with the US 10-year up to 76 basis points and the Canada up to 60. There's a pretty big jump for the 10-year US as it was at 51 basis points yesterday. And you can take a look at the US yield curve. It is looking much better now than it has in the past, while the Canadian yield curve is still inverted. In the currency markets, the US dollar had a really good day, rising up against most currencies and having overall a strong day. The Canadian dollar also rebounded, as you can see with the oil prices being up and how it's tied to the oil prices. The Japanese yen had a really rough day though, fallen from its previous levels, but that which is kind of understandable if you consider how much it's gone up in the past few weeks. The British pound also had a rough day, as well as the Australian dollar. The Chinese yen also had a pretty strong day overall. The coronavirus continues to dominate headlines, with total cases reaching 118,522 and deaths reaching 4,267. The biggest increases continue to come out of Italy and Iran, as China only adds 26 new cases. And new cases are coming out of France, Spain, and Germany at pretty big rates also. A lot of stimulus plans are coming out as many countries are trying to combat the economic damage that this is going to happen through stimulus packages. Trump kind of plans to give tax cuts through payroll taxes and also expand unemployment benefits. In Japan, they announced a spending plan of 4.1 billion stimulus to help small and medium-sized business, as well as a $15 billion free interest rate loans. Australia is also looking to potentially have a stimulus plan of 6.6 billion to help with the situation. Also, Air Canada has announced that they're suspending flights to Italy for fears over infections, because the whole of Italy is now on lockdown. Also, Walmart has announced that any workers that are working there and that have concerns about getting the virus while working there are able to take time off and avoid work. The oil price war between Saudi Arabia and Russia continues, with Saudi Arabia pledging to supply a record 12.3 million barrels a day next month. Now, this is a 25% increase over last month's production, and that they're suggesting that they might not actually be able to supply that through production, and that they'll use part of their inventory to fund this. Russia also plans to increase production by a total of 500,000 barrels a day. Overall, what's kind of interesting is that they point out that Saudi Arabia can't fund their country's spending based off of the Brent crude price of $35 a barrel. They expect that they'll have an issue with their budget and that they'll have a deficit of 15% in 2020 if the price continues. Overall, that's not a significant deficit, and I can't imagine that this price war will continue to go on for a long amount of time. Overall, it's interesting to see what the effects are. It's hard to say how far oil will continue to fall, even though it is up on the day, having a decent gain over a few dollars a barrel. But some are suggesting that it might go as low as $20 to $30 a barrel. Now, what will be interesting to watch out for is how the shale production in America will do with oil prices at that $35 to $30 level. Overall, as you can see in this graph, it's not looking too well for the companies to be able to turn a profit, as most of them aren't able to get a profit at this price per barrel, especially when you consider how much production has gone on into the US lately as they become the biggest oil producer in the world, an exporter, that this could have a significant impact on the whole energy sector, as you can see with the big drop yesterday. But it'll be hard to see what these companies will do going forward. Probably won't see as much drilling and new mining happening, but I guess we'll have to wait and see how the price war continues, as prices may continue to drop or continue to go up. I think it'll probably start to go up. I can't imagine Saudi Arabia wants it that low as they were hoping to raise prices initially. There's some more worrying news coming out of Russia as Putin is looking to extend his term. So I guess in Russia they have a limited amount of terms the president can stay in stay stay as the party leader, and that he was normally going to have to only be able to rule until 2024. But certain members of his party have been suggesting that they get rid of that rule and let him to continue to rule. Though it is a little is suggested that they might not actually be party necessarily the party members' ideas, because originally Putin came out saying that he didn't like that idea, but that might be just something to try and save face. It seems like more this is probably his idea to continue to stay in power. The reason they give for this is to make sure everything continues smoothly and not to have everything changing, and you can kind of get that same old know what you're going to get kind of idea. But overall, this is the same thing that happened in China a few years ago where they also extended. It seems like a bunch of bullshit. I don't really I don't really believe the sentiment behind it, and just seems like a way for someone to rule the country for as long as they can. There's more bad news around the world as Lebanon has defaulted on 1.2 billion euro bond that was due on Monday. They decided not to pay back the loan and instead are focusing on paying for essential goods. This isn't a good look for them because it's never a good look for a government to default on their loans. Sometimes they don't necessarily default, as you see. The reason why it's often called risk-free is because the government can print money, but because of inflation, especially because it's a euro bond as well, you're it's probably a less of two evils to just default on it. Overall, not a good look for Lebanon going forward. Even more bad news in the Canada's energy sector, with Cenovus cutting their forecasts. They plan to cut CapEx this year by 32%, and they're also temporarily suspending their crude by rail program. Yesterday, their stock actually dropped more than 50%, which is a huge plunge for them. They will also not be using the credits for oil under the Alberta credit system allowance. Overall, they plan to produce between 350,000 to 400,000 barrel of oils a day in 2020, which is 6% lower than their previous forecast. Overall, Alberta is really struggling with what's going on now, especially when you consider how the government has messed up a lot of the projects going on, especially getting new oil to market. Because you have to consider, while oil is dropped around that 35 level. It is even worse when you look at Western Canada Select, as that often trades at a discount to WTI.